Ladies and gentlemen, welcome back to the channel. Let's dive into everything you need to know as investors in AMC as well as GME. As we know, it is forecasted GME will be reporting earnings this week as well, which is going to make the situation that much more complex and potentially that much more bullish. So let's dive into the latest on these two names, give you guys a well-deserved update. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time, link down below in the description of this video as well. So let's get into it, guys. First things first, anytime now you're going to be getting an update from the House Rules Committee. We're going to know if this is going to be voted on the House floor tomorrow. Now, if it is, well, that's going to be a positive thing for the markets, at least a neutral thing. If it's not, it's going to put more pressure on big tech. What we have seen throughout the day today is kind of tech starting at a high level and really has been just trending down ever since then. The Nasdaq at one point today was up 1.5%. Now, not so much. So we're waiting on new information, and that is definitely going to be important. But look at this. Look at this hit piece on CNBC. Nvidia hits 1 trillion market cap, and the home price declines may be over, S&P Case-Shiller says. And those are some of the two biggest stories that are happening on the day today. This is not really what the Fed wants to see, housing prices going up again, because that's going to lead to more housing inflation, and housing inflation is one of the last real sticky parts of inflation that really hasn't budged at all, or it really hasn't moved down at all. And that's a big problem. This is leading to the markets pricing in another rate hike for June with an over 60%, now 69% chance of another rate hike. You're going to need to see some really soft inflation data coming in June 13th or a really soft labor report coming this Friday to get the Fed to pause raising rates. And markets just really won't accept that. Markets just will not accept or even acknowledge the Fed's going to raise rates again. It's been straight to the moon, baby, for stocks such as Nvidia. Nvidia had a conference over this weekend, which they unveiled their next generation kind of computing chips that are going to be able to power ChatGPT and power anything else that's going to be coming online in the future. Now, let's talk about AMC as well as GME now here in this video. If we take a look at the Ortex overview for AMC stock, you're looking at a 20% short interest of free float, 103 million shares currently sold short, cost to borrow average 75%, cost to borrow max at about 100%, cost to borrow minimum at 55.5%, 250,000 shares that are available with a cost to borrow fee of about 53%. Now, if we take a look at the option activity for the day today, no surprise, those deep in the money puts are yet again being targeted. $10 puts for August as well as some of the $5 puts for June are definitely reigning supreme again today. And if you guys have not seen the last video, I highly recommend you guys go ahead and check that out, because that video essentially talks about discretionary and indiscretionary short covering. When the options are the reason why market makers are shorting the stock, it's indiscretionary. It's non-discretionary. When the stock moves up, market makers, they cover their positions. And there's up to 65 million shares that are currently sold short by market makers that would have to be bought back if AMC stock did start to rally. So I think over the next week or two here, really until we get to these large expirations, you do have a chance of seeing a Gme Squeeze off of some of these lows that we are currently at. So I would keep that in mind as a possibility if things do start to turn around for AMC stock. And really, now it looks like we're going to get GME earnings on June 7th. They kind of keep moving this date around all over the place. But that is going to be a very interesting catalyst for AMC, and it looks like AMC is getting sued again. It says AMC Entertainment Holdings shareholder alert, investigation over possible wrongdoing. An investigation on behalf of investors in AMC Entertainment shares over potential wrongdoing at AMC Entertainment Holdings was announced. So it looks like AMC is actually getting sued again, and some of these complaints even date back to 2018 and 2019. So that's an interesting story. It doesn't look like we have too much news actually on that here right now, but nonetheless, if we take a look at the overview of the data here with AMC stock, short score is at 89, $505.33 million worth of short positions in AMC. Free flow out on loan at about 31%, which I find interesting that the short interest is 20% and the free flow out on loan is now 30.5%. That's a big spread, bigger than it was before this latest update of the short interest. Shares out on loan 158.22 million. Days to cover 5.88. Cost to borrow 50.5%, trailing 3-month average, and 100% share utilization. Now, if we take a look at the Stonko tracker data currently for AMC stock, you got about 3,600 calls currently in the money for this week. Out the money calls at about 61,000. In the money puts at 25,000. Out the money puts at 23,000. So you are looking at more calls than puts for this week's option expiration. For the next couple of weeks, same story actually. There's more calls than puts. If you look at June 16th, you got 5,600 calls in the money, 492,000 calls that are out the money. In the money puts at 341,000, out the money puts at 489,000. So June 16th, between now and June 16th, that's where you could see some of that indiscretionary covering by market makers if AMC stock does get a move to the upside. And that's just because of the pure amount of puts that are currently in the money, and a lot of these puts are deep in the money. And then obviously until July 21st, that's going to be big as well. You got almost 400,000 puts currently in the money and almost 500,000 puts that are out of the money as well for July 21st, guys. So there you have that. Let's switch gears to GME, talk about what their data looks like. Pretty similar to AMC, but there is some unique differences. Take a look at the shorts. You got 1.2 billion worth of short positions in GME. Ooh. Estimated short interest of free flow dropping like a rock at 14%. Holy moly. And we haven't even got an official update. The last release date we got of the short interest for May 15th was 21.5% short interest. Why is this estimating 14% short interest? That really doesn't make all too much sense at all. Very strange. I would not believe these numbers at all. That's absolutely insane. Free flow out on loan 21%, shares on loan 55.5 million, days to cover 12.43, cost to borrow 10.38%. and 83.07% share utilization, dropping under 100 for the first time in about 18 months. That is very strange, actually. Some weird data you're seeing here with GME, as GME is up about 3% on the day here as well. You're getting a June 16th $21 call coming in for $55,000, 100% positive order value for GME options here today. And you could see, I mean, there's a stark difference between GME and AMC and the option activity that we have seen as of recently. Now, let's go ahead and talk technicals on AMC stock. Big level that I was watching, $4.64 per share. You are at $4.59 per share. I want to see if you retrace that, if you can close above $4.64 by the end of the day today. That is going to be a very good thing, but you are clearly in a downtrend as of right now. It's not AMC's fault. Those deep in the money puts, 65 million shares that are short by market makers, is aggressive. right? Let's just call it that. It's very, very aggressive. MACD in bearish territory, RSI heading to oversold levels. You should get a bounce sometime here soon. That is for certain. If you do take a look at GME now on a technical basis, looks much better on the charts, but you're also paying a lot more of a premium to be in GME. GME is now above the 200-day moving average, and this could start another rally with GME. GME is up about 3% here on the day today, breaking above that 200-day moving average. Very solid sign, as well as this downtrending line of resistance. RSI at 64, so a lot healthier, closer to that overbought side, and the MACD as well in healthy territory. Now, with GME, all that matters is their earnings. If come June 7th, they have positive earnings and they make a profit, it's going to be off to the races for GME and AMC. I already talked about that. These stocks could go up 25-50% off of a positive earnings report alone. So something that I would definitely be watching for there. If they have negative earnings, well, you could see some downside closer to that $20 share price, guys. So there you have it. That's what we have for you as well. I do want to point out that the options have taken such a big toll on AMC as of recently because of the low volume. When you're seeing low volume, it doesn't take a lot of bearish option activity to really get the stock to fall. You've only seen 10 million for volume so far on the day today, which is a lot lower than what we have historically seen with AMC over the last couple of years. So when volume picks up, that's the key to a rally with AMC stock. But geez, it looks like you are due for a bounce a while ago, to be quite frank with you guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.